downside of risky investments: if you're fed up with unpredictable market swings and want a foolproof way to grow your money, Warren Buffett's surprising strategies might be the game changer you've been searching for. Here are Warren Buffett's 6 unexpected strategies that guarantee you long-term success. Number 1. The power of compound interest. Compound interest is often described as the 8th wonder of the world, and for good reason. It's a process where the money you earn on your investment generates even more earnings over time. Essentially, you earn interest on your initial investment, and then you earn interest on that interest. That exponential growth can lead to substantial wealth accumulation, especially when given enough time to work its magic. Warren Buffett recognized the power of compound interest early in his investing journey. He invested in a pinball machine business in his youth, which he later sold for a profit. Instead of spending that money, he reinvested it, allowing his earnings to grow. His early experience taught him that the longer you let your money work for you, the more it multiplies. Buffett's success story is a testament to the importance of patience and time in wealth building. While many investors seek quick returns, Buffett advocates for long-term perspective. He often emphasizes the best time to start investing is now, as the earlier you begin, the more time your investments have to compound. By understanding and leveraging compound interest, Buffett transforms his financial journey, turning modest beginnings into a multi-billion-dollar empire. If you enjoyed the video, hit the subscribe button and comment down your thoughts. If you want to explore money-making strategies, click the link in the description to start your financial journey. Number 2. Investing in what you know. Warren Buffett has long championed the strategy of investing in industries and companies that he understands deeply. This approach allows him to make informed decisions and assess the true value of a business. By focusing on what he knows, Buffett minimizes risk and increases his chances of success. He famously advises investors to stick to their circle of competence, meaning they should invest in areas where they have knowledge and experience. One notable example of this principle in action is Buffett's investment in Coca-Cola. Having a clear understanding of the beverage industry and the brand's strong market position, he recognized the potential for long-term growth. His investment in the company has paid off handsomely over the years, showcasing the effectiveness of his strategy. Another example is his investment in American Express, which he understood well due to its strong brand loyalty and competitive advantages in the financial services sector. By investing in companies he was familiar with, Buffett was able to navigate challenges and capitalize on opportunities effectively. For viewers looking to build their own wealth, the lesson is clear. Focus on your own expertise when investing. By leveraging your knowledge and understanding of specific industries, you can make more informed decisions and increase your chances of achieving financial success. Number 3. The importance of value investing. Value investing is an investment philosophy that focuses on identifying the valued companies whose stock prices do not reflect their true worth. This approach is grounded in the belief that the market can be irrational, leading to price discrepancies that savvy investors can exploit. Key principles of value investing include looking for companies with strong fundamentals, a solid business model, and a competitive advantage, all while trading at a price lower than their intrinsic value. Warren Buffett has mastered the art of value investing, using a disciplined approach to identify opportunities. He meticulously analyzes financial statements, evaluates management quality, and assesses market conditions to find companies that are undervalued. For instance, his investment in Berkshire Hathaway exemplifies this philosophy. He recognized the potential of the textile company long before it transforms into a diversified holding conglomerate. The significance of thorough research and analysis cannot be overstated in Buffett's strategy. He often spends considerable time studying a company before making an investment decision, ensuring he understands its operations and market position. This commitment to due diligence has allowed him to make informed choices that have significantly contributed to his wealth over the years. By adopting a value investing mindset, you too can uncover hidden gems in the market and build a robust investment portfolio. Number 4. Learning from mistakes. Warren Buffett, despite his legendary status as an investor, has faced his share of failures. One notable mistake was his investment in Dexter Shoe Company in the 1990s. Buffett invested heavily in the company, believing it had strong growth potential. However, the rise of overseas competition led to its decline, resulting in a significant loss. Reflecting on this experience, Buffett admitted that he learned the hard way about the importance of understanding competitive dynamics in an industry. Another example is his investment in the airline industry. Initially, Buffett invested in several airlines only to realize that the sector was plagued by volatility and unpredictable market conditions. After suffering losses, he decided to exit these investments, acknowledging that sometimes even the best analysis can lead to poor outcomes. These stories illustrate that failures can be powerful teachers. Buffett encourages investors to view mistakes not as setbacks, but as opportunities for growth and learning. Resilience is crucial in investing. The ability to bounce back from failures and adapt your strategy is what separates successful investors from the rest. By embracing your mistakes and learning from them, you can refine your approach and ultimately achieve greater success in your investment journey. Remember, every setback can pave the way for future triumphs. Number 5. The role of patience. Patience is often cited as one of the most critical factors in Warren Buffett's investment success. In a world where many investors chase quick returns, Buffett stands out for his long-term perspective. He believes that true wealth is built over time, and that the best investments require a commitment to hold onto them through market fluctuations. This mindset allows him to ride out volatility and benefit from the compounding growth of his investments. One prime example of Buffett's patience is his investments in Apple. Initially, he began buying shares in 2016, and despite market ups and downs, he held onto his position as the company continued to innovate and grow. This long-term commitment has paid off significantly, making Apple one of his largest holdings and a substantial contributor to his wealth. Another example is his investment in Coca-Cola. Buffett purchased shares in the late 1980s and has held them for decades, demonstrating his belief in the brand's enduring value. This patience has allowed him to reap the rewards of dividends and capital appreciation over time. For viewers looking to achieve their financial goals, adopting a similar mindset is essential. Embrace the idea that investing is a marathon, not a sprint. By cultivating patience and focusing on long-term growth, you can navigate the ups and downs of the market and ultimately build lasting wealth. Number 6. Surrounding yourself with the right people. Warren Buffett's remarkable success can be attributed not only to his investment acumen, but also to the influential relationships he has cultivated throughout his career. One of the most significant partnerships in Buffett's life is with Charlie Munger, his longtime business partner at Berkshire Hathaway. Munger's analytical approach and diverse perspective have complemented Buffett's investment philosophy, allowing them to make more informed decisions together. Their collaboration exemplifies how surrounding yourself with the right people can enhance your own capabilities and lead to greater success. Learning from others in the investment community is invaluable. Buffett often emphasizes the importance of mentorship and collaboration, stating that he has benefited greatly from the insights and experiences of those around him. By engaging with knowledgeable individuals, investors can gain new perspectives, refine their strategies, and avoid common pitfalls. For viewers looking to advance their own financial journeys, seeking mentors and building supportive networks is crucial. Surround yourself with individuals who inspire you, challenge your thinking, and share their expertise, whether through formal mentorship programs or informal connections. These relationships can provide guidance, encouragement, and valuable lessons. Remember, your investing is not just about numbers, it's also about the people you learn from and collaborate with along the way. Building a strong network can be a game changer in your investment success. If you want to know more about the path to prosperity, check out the video here and see you there.